This is Jeremy North with your educational and economic update for December of 2022. In this month's video, I'll discuss major headlines that influenced markets in November, along with economic and market events that we are looking at to influence returns in December and into 2023. Stay tuned at the end of the video for the always exciting required disclosure statement. Well, in November, the U.S. stock market continued its upward move as the S&P 500 rose 5.6%, the NASDAQ was up 4.5%, and the Dow was up 6%. Bonds made their biggest move all year as the aggregate bond index price actually moved up by 3.5%. Since bond yields fall when prices move up, the interest rate decrease on longer-term bonds helped move stocks up. However, shorter-term bonds are still yielding more than intermediate and long-term bonds. The 2-year Treasury is at 4.31%, still above the 10-year Treasury, which is at 3.6%. This creates an inverted yield curve situation, which can be an indicator of an economic recession. Global political and economic news continues to impact the markets. The war in Ukraine, China's zero COVID policy, and the risk of a global recession are high on the list. The FOMC and Fed Chairman Powell had a lot to say regarding this and other impacts on the economy in his speech on November 30th. The Fed is greatly concerned that inflation has and will impose significant hardship, straining budgets and shrinking what paychecks will buy, what Powell said. They realize this hurts lower income people the most and see it as their responsibility to obtain lower inflation and bring about more price stability. Their goal is to bring core inflation back down to 2%. Right now, it is between 5 and 6%. With the current rate in mind, the Fed feels the need to raise interest rates enough, again, to eventually bring that rate back down to 2%. Powell said it's hard to know how long that will take or how high rates will have to go, but they have made substantial progress, he feels, since last March. Most economists are predicting a 0.5 percentage point increase in December versus the 0.75 point that we saw the last few increases. The markets loved the news about the 0.5 point increase, expected 0.5 point increase in December, and rallied 3% on November 30th after Powell gave his speech. A 3% rally in one day is a very rare occurrence. It only happens 0.03% of the time and often is significant enough to cause the markets to further rally, at least in short term. However, we still have many headwinds and indicators telling us that a recession is possible for 2023, including the inverted yield curve and the expected continuation of higher short-term lending rates. Some market pundits are calling for a new low for the market sometime in 2023 and aren't expecting any real long-term rallies until the Fed has reversed its course and begins to ratchet down the Fed funds rate again. There's also good news and economic indicators. Some feel the market can actually bounce back. For example, a record number of Americans were shopping over the Thanksgiving weekend with a 9.4 increase from 2021. Sales also increased over the same weekend, and the S&P reported that their retail spending index was up strongly for the third month in a row. Holiday sales are expected to continue strongly with an estimated increase from last year of between 6 to 8%. This is great news for the economy, but bad news if the Fed sees it as an indication that the Fed's fund rate should continue to rise at the same 0.75% in this coming month's meeting. Well, more on the positive news front, the consumer price index actually declined from the previous month and was less than expected. Food costs went up slightly, but at the smallest pace all year long. As has been the case all 2022, we expect the markets to continue to be a roller coaster ride of unpredictability going into 2023. Remember, we are here to help. As always, we are diligently assessing the economic and political implications for your portfolio. Should you have any concerns or questions or would like to discuss your personal situation, please give us a call. With all that being said, here's the disclosure I'm required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. This is Jeremy Norris signing out for the month of December. I wish you a very Merry Christmas, Happy Holidays, and I will look forward to seeing you all in January. Thanks. Bye.